What's going on, everyone? My name is Nicholas Merton here at Data Dash. Today is September 18th of 2017. Well, folks, it's time again on this channel to share with you all another trading tip that I use in both my trading and investing strategies for cryptocurrencies. It is no other than one of my favorite indicators, the Bollinger Bands. This is commonly used in both equities markets as well as cryptocurrency, so it can become a really good tool for those of you out there who like to use technical analysis to spot good trading opportunities as well as good dips to buy, as well as some overbought moments where you might want to consider selling your cryptocurrency. So let's go ahead, dive into it, how to get it set up on your chart, what exactly is the Bollinger Bands, and then how to use it in your trading strategy. So without further ado, let's jump right into it and get it all done in a short period of time. First off, I want to go about setting it up. It's pretty simple. It's a very common indicator. You either go to your Indicators or Studies tab. We usually do things on TradingView, but Neo's price action is better on Bittrex. We have more price action to work with, so we're going to go ahead, use the Studies tab, and click on Bollinger Bands. Now, for the default settings, we're just going to leave them as is and scroll down here to Create. And then we should have it printed on the chart. There we go. We've got the Bollinger Bands right there. So I want to go ahead and talk about what makes up the Bollinger Bands, okay? So there's really kind of two main components. You have in the middle of the Bollinger Bands a singular line, which goes through and it'll change over time, and it's the 20 SMA. Okay, so we've talked about standard moving averages before, but it's pretty much a 20 SMA in the middle of the Bollinger Bands, and of course you can adjust it, but this is the standard when we use the Bittrex platform. And in most cases as well, the indicators numbers should be similar on other platforms as well. The thing to keep in mind, though, is the outer bands of the Bollinger Bands. And these are really going to be what brings the power to how you use the Bollinger Bands, okay? Now, these outer bands are deviations from that SMA. They help explain a sense of volatility in markets. I could go into a lot of detail about it, but it's much more important to understand that the wider the bands are, the more volatility there is in price action. And we'll talk about what volatility means in a second. And with closer bands, when the bands get closer to the center line, that means there's less volatility in markets. So what exactly is volatility? Well, you can see that with volatility, we can see the bands get bigger, okay, as we said before. And when there's a lot of volatility, there's a lot of more price movement than, for example, say down here when we look at Neo, where things are quite tight on the price action. The Bollinger Bands are very narrow, and we see that there's not too much change in price action. Volatility is just that. It is the fluctuation of price action. It doesn't have anything to do with volume. It doesn't have anything to do with, per se, how many people are trading a certain asset or cryptocurrency. No, it has to do with the range of price action within a given time period. And we can see that through this time period, there's much less change in price than over here, per se, where we see, days where it's moving up 10 to 15% or dropping 10 to 15%, and these days where it was going up like crazy, over 100% in a single day, and then dropping down 30%, just like serious price action we're seeing on these very small time periods. That's high volatility, and this over here would be a perfect example of low volatility. Now, how can we use the bands now that we understand this to help us, okay? Well, there's a few things I'm going to leave you off with. The first thing I want to tell you all, and it is traditional in markets, it's not, of course, with any indicator, it's not guaranteed, but generally speaking, when you have the bands printed on your chart, and you've had a period of high volatility that's been narrowed down to lower volatility, you can usually expect more volatility to come in. It's kind of a 50-50 gamut. There's high volatility, and then there's low volatility. There's high volatility, then low volatility. So when you've had this period, for example, like here and here, where there's been a lot of volatility, you can expect a period where the volatility will probably slow down, the price action will flatten out, and a lot of the volume will go away, so you'll have a lot less fluctuation in price action. But once you get this period for a long enough time, and the Bollinger Bands get narrowed and narrowed and narrowed over time, you can expect there's most likely some buyers ready to come in, the price action's most likely settled, and if there's some reason to be exuberant, the price action will come up. Now, that doesn't always mean it's going to be to the upside. It can be to the downside sometimes. That just means that some kind of big movement is happening. And this is why wedges are really important. As you can see, as the bands coil in, we also know that on Neo, there was a wedge coming in on the price action, as we can draw it on our chart actually here. Now, this isn't always, to happen with, this doesn't always happen with Bollinger Bands, but as you can see, the price action narrowed in, the wedge formed, and the Bollinger Bands also narrowed in as well, because the volatility was lowering. It was waiting for the next big run-up. And we got that in Neo, as we can obviously see on the chart. Now, there's another way that you can use Bollinger Bands to find if something is overbought or oversold. Now, of course, again, it is not guaranteed, but I will tell you this, why it's very powerful to use this if you're looking for overbought or oversold price levels. Around 98 to 99% of all price action for any given asset or cryptocurrency is going to remain within the bands. That's why they have the deviations on the Bollinger Bands from the standard moving average. There is a certain price range where things either get over exuberant or oversold. So what we have to see here is we can obviously see the majority of the time the price action stays within the bands, but there's these times where sometimes it stands out a little bit outside, especially during those run-ups. It'll sometimes carry outside the bands, and you can see out here we were having this absolute exuberance where it was just way too far outside the bands. And I was, talking to people on my channel. I said, don't buy NEO at fresh highs. And that's the same thing with most of these run-ups. You can see when things get overtly exuberant, and the bands do a great job of showing that. When you have too many days outside the bands, you're most likely due for a correction. And we got exactly that. And it pulled back much further than that level up there. So that's why we don't buy at fresh highs. That's why we don't buy when we stepped outside of the bands to the upside. And the same goes for things going to the downside. It could be a great opportunity to buy in if something is extremely low. So, for example, we had this day where there was some news that came out about China and ICOs, and we saw that NEO stepped way outside of the bands. Now, if there's fundamental changes, sometimes you want to consider that maybe that price action is justified and it'll stay down there. But a lot of the time, things get oversold into the news, and the bands can be a great indicator to know when something is oversold. So, for example, if you would have bought generally maybe at like 450,000 Satoshis, well, you'd be up on your investment. In fact, if you were to do a simple swing trade, you were able to sell it at a price around in this range if you really wanted to. And it would be a huge instant return within a matter of simply a few days. And the reason why that's so powerful is all you had to do is look at the Bollinger Band, see that it was oversold. Now, again, there's no guarantee with it. I really want to drill that into you. As much as I might make it sound great, there is no guarantee, and this is why you want to use a multitude of indicators. But the Bollinger Bands are consistent, and in an early market like this, like cryptocurrencies, Bollinger Bands can be an extremely prominent resource that you can use to stay out of the competition, to know when people have gotten either overtly exuberant buying to the upside or also selling to the downside, where you can find good buying opportunities, as well as good selling opportunities when things get a little too overinflated. So that's generally how you use the Bollinger Bands. I think NEO was a perfect example to look at. But basically, if you were to use this on NEO, I'll leave you off with this, you want to see NEO hold its price action in a relatively straight area, kind of like we saw back here, and wait for the bands to narrow in. And once the volume settled, once the volatility has lowered down as well, and the bands have gotten narrow against the 20 SMA, that's when you want to look for a big breakout, either to the upside or to the downside. So that's generally how you use the Bollinger Bands, everyone. I hope you got some information out of this video. I love talking about it today because the Bollinger Bands are one of my favorite indicators to use. And I think whether or not you're trading or investing, I think Bollinger Bands are a great tool to use in any case scenario. That's it for the video, folks. Thank you all so much for watching. If you've got an indicator you want me to cover, leave it down in the comments down below. But until then, everyone, I will see you all in the next video. Stay tuned.